Well, holy moly, stock market is crashing again. So is crypto. And you still see a few people talking about how, oh, there might be some safe area of the market. There are the energy stocks, or Tesla's looking good. Maybe the Dow looks good still. The truth is that this is a slow, maybe not even so slow, it's a slow motion locomotive crash. And the market is just headed nowhere but down. And the truth is, there's no reason to buy the dips. There's no reason to buy and hold. I actually think it's a little bit strange, in fact, how you have people like Graham talking about how buy and hold still works, even when, by his own statistics, some of these stocks come back after 10 to 13 years. Like he was showing, oh well, the Nasdaq, it comes back after 10 years, so you got your money back after 10 years. I think that kind of shows that buy and hold is really a bad philosophy or bad pattern when it comes down to certain kinds of very risky assets. Like Nasdaq is a lot riskier than people think. In the late 90s, as you know, Nasdaq actually went down 90%, and this is not Bitcoin, this is the Nasdaq. It actually went down that much. And the truth is, we've had interest rates at a low of 5,000 years of history. We've never had interest rates this low, and now you have raising inflation. And so the Federal Reserve is thinking, hey, we got to do something to fix the inflation rate. And they're really boxed in. At the same time, they want to keep the asset prices high, but on the other hand, they don't really want the raising inflation. So that is actually causing them to raise rates pretty dramatically. And I think the interesting thing about this is that it's an interesting situation, because we've never had anything quite like this, where the Fed is really boxed in. They're really crashing everything. And really, you kind of see a lot of companies that really were not built to handle this kind of new environment. Like you have Coinbase down 84%, you have Robinhood down dramatically, and even Shopify is down like 90%. And this kind of shows that a lot of these companies had a PE that was way too high considering the market environment that we're in. Once you raise rates, people actually have the opportunity to put their money into things that are safer. So a lot of money will move to that instead of riskier assets, especially if some of these stocks have PEs in the hundreds. Like even Tesla is ridiculous when you look at it. It makes no rational sense to own Tesla stock, but you still see these people, they think they're really cool on YouTube. Oh, I own Tesla, I'm really smart. Well, you were smart to buy it when it was cheap, and he should have sold it by now. It's absurd to own Tesla at this point. And the same is true for the Bitcoin. So many people think that they're smart by being hodlers, but if you want to know a real trick, the truth is the big money buys Bitcoin when it's way cheaper, and that's when they're telling you to be scared. They don't want you to buy when it's cheap. And then when it's high, that's when they start doing the propaganda about, oh, you got to hold it, you shouldn't sell it. And when it keeps going down, eventually they will. I bet once Bitcoin is really cheap, they will probably want a whole bunch of supply of Bitcoin so they could buy it. So they'll say, well, I don't know, maybe Bitcoin is not so useful. Maybe this is actually not the smartest thing in the world, and maybe it's only serves bad purposes. That's when all the retail will all of a sudden start dumping all of their Bitcoin. There will be massive volume, and that's probably will be the bottom of Bitcoin, just like it was last time. And it's kind of sad to see the cycle repeat itself. I still see a few of the big money Bitcoin people saying, oh, hold your Bitcoin, don't sell it. But that's not really a smart advice. What do you think about that, Danny?
I think it's good to be out for the crypto winter. It's been pretty intense. I think I started selling around 48,000 on the Bitcoin. So
oh wow,
that was a good time to get out on the second rebound.
Whereas I got out of Bitcoin, I'm not trying to brag, I actually got out at 40,300. And what's interesting about it is I actually felt bad about about it originally, because of course after I sold it, it went back up to like 4,600 or 4,500. But it turns out that that was a smart price to sell it. I mean, that was pretty much the end of the line. There really is no reason to hold Bitcoin at this point. Like, think of what would cause Bitcoin to go up at this point. You can't think of any. Remember when there were stories like, oh, El Salvador is adopting Bitcoin, and that kind of pushed it up? Well, nobody really cares about that story anymore. There's only one group of people who could push Bitcoin up again, and that's the Federal Reserve. And they're not. They don't care if Bitcoin goes down a lot. In fact, I don't think they're big fans of Bitcoin, to be honest, because it's kind of an alternative to the dollar if you think about it. So if you think about it really seriously, they probably want Bitcoin to go down a lot. So they might even want to raise rates more and push Bitcoin down a lot. So it's bad to be on the opposite side of the Fed. It just doesn't work. That's why buying the dip is not going to work for a lot of people. I know a lot of people, it's kind of ridiculous. I've been looking at the comments on some of these financial channels, and so many of the people lost a lot of money because they followed these YouTubers who told them the hot stocks to buy. See, I will not be telling you hot stocks to buy in a crash, because the truth is nobody really knows what's going to happen after everything settles down, and this might go on longer than people think. You have to remember the 2000 bear market started in the late part of 1999, where things started to be a little tipsy. Then, oh no, actually it was started in the late 2000s. That was when things started to fall apart a little bit. Then 2001, then you had the, pretty much you had the terrorist attack, and continued all the way into late 2002, I believe. And so these kinds of bear markets, they don't just come and go, especially if it's a real serious one like we're in. If they're going to be raising rates in order to cut down inflation, well, they're going to be raising, they have a lot of room to raise it and really break a whole bunch of companies. A lot of these companies are just not built to survive. How would you, sitting at home, know which companies can survive and which can't in a high interest rate environment? It's just not really possible, especially because we haven't really barely even seen the interest rates ripple through the system yet. I mean, the stock market has priced it in already, but you can see it's not going to be a good result for a lot of companies. Anyway, I hope that I was informative. Click the like button and subscribe, and I'll see you in the next video.